Most people believe the financial system is clean, regulated, and protected by laws designed to keep criminals out. We're told that banks exist to safeguard money, markets exist to allocate capital efficiently, and governments exist to enforce rules. But here is the unsettling question that almost no one asks. If the system is so secure, why does trillions of dollars in criminal money pass through it every year, undetected, uninterrupted, and often protected? How does money earned from drugs, weapons, cybercrime, smuggling, and corruption move through the same institutions trusted by governments, corporations, and ordinary people? The mystery isn't whether the underworld touches legitimate finance. The mystery is how deeply it has already penetrated it, and why the system keeps allowing it. To understand this, we need to go back long before digital banking, offshore accounts, or cryptocurrencies. Criminal money has always sought legitimacy. In ancient empires, war, loot, and tribute were laundered through temples and royal treasuries. In medieval Europe, pirates invested stolen gold into land and trade ventures. Crime didn't operate outside the economy, it embedded itself inside it. The line between legitimate wealth and criminal wealth was never clear. It was simply controlled by power. Whoever controlled the financial gatekeepers decided what money was clean. As banking evolved, so did criminal finance. In the 17th and 18th centuries, private banks financed wars, colonial expansion, and trade monopolies. Smuggling networks flourished alongside official trade routes, often protected by merchants, politicians, and bankers who quietly benefited. The profits from illegal trade, opium, slaves, untaxed goods, were reinvested into shipping companies, insurance firms, and early financial institutions. By the time modern banking systems emerged, criminal capital was already woven into their foundations. The 20th century accelerated this integration. Organized crime groups didn't just rob banks, they learned to use them. During Prohibition in the United States, criminal syndicates generated enormous cash flows from illegal alcohol. But cash alone was useless unless it could be legitimized. Banks, currency exchanges, real estate markets, and shell businesses became the solution. Criminal organizations didn't need to overthrow the financial system. They simply learned how to operate within it. Corrupt bankers, complicit accountants, and silent regulators made it possible. After World War II, global finance transformed rapidly. International trade expanded, currencies floated, and capital began moving across borders at unprecedented speed. This created efficiency, but it also created blind spots. Jurisdictions competed for investment by lowering oversight. Bank secrecy laws emerged, promising privacy and discretion. Offshore financial centers grew, offering anonymity as a feature, not a flaw. Criminal money didn't force its way into this system. It was invited in under the banner of financial freedom. By the 1970s and 1980s, the scale of criminal finance exploded. Drug trafficking generated billions annually. Arms dealers financed proxy wars. Corruption siphoned public funds into private accounts. These funds needed entry points into the legitimate economy, and the system provided them. Banks accepted deposits without asking too many questions. Real estate markets absorbed suspicious cash flows. Corporations became vehicles for hiding ownership. Financial complexity became a shield. This wasn't accidental. Financial institutions were rewarded for growth, not scrutiny. The more money flowed through their systems, the more fees they earned. Risk management focused on market volatility, not criminal infiltration. Compliance became a box-ticking exercise rather than a barrier. The incentives were clear. Stopping dirty money was expensive, slow, and often unprofitable. Letting it flow was easier. The breaking point arrived repeatedly, but the lessons were never fully learned. Scandals exposed how drug cartels laundered money through major banks. Investigations revealed how dictators had stolen national wealth using global financial institutions. Terrorist financing passed through regulated systems without triggering alarms. Each time, fines were issued, executives apologized, policies were updated, and then the system returned to business as usual. The 2008 financial crisis revealed something even more disturbing. When the global economy faced collapse, governments rushed to save banks regardless of how they had behaved. Institutions that had facilitated fraud, market manipulation, and criminal flows were deemed too big to fail. This sent a powerful message. Participation in the financial system grants protection. Criminal networks learned that the safest place for money is often inside institutions governments cannot afford to shut down. As digital banking expanded, the underworld adapted again. Online payments, correspondent banking, fintech platforms, and global clearing systems increased speed and opacity. Money could now cross continents in seconds, passing through dozens of institutions before regulators even noticed. Each layer added plausible deniability. Each transaction looked legitimate in isolation. Criminal networks didn't need secrecy, they needed complexity. Shell companies multiplied. Trust structures obscured ownership. Professional enablers, lawyers, consultants, accountants became essential. Most never handled crime directly. They handled paperwork. But paperwork was the key. With the right documents, illegal wealth could become investment capital, political donations, or corporate revenue. The underworld didn't operate in dark basements. It operated in office towers. The fallout of this integration is profound. When criminal money enters legitimate finance, it doesn't just disappear, it reshapes markets. Real estate prices inflate. Businesses face unfair competition. Political systems become vulnerable to influence. Public trust erodes. Entire economies distort around hidden flows of capital that no one publicly acknowledges, but everyone quietly accommodates. Attempts to fix the problem have repeatedly failed. Governments introduce stricter regulations, but enforcement remains uneven. Financial institutions invest in compliance technology, but loopholes persist. Offshore secrecy laws evolve rather than disappear. Criminal networks simply shift routes, jurisdictions, and methods. The system reacts slowly. Crime adapts quickly. Modern parallels make this even clearer. Cybercrime now generates hundreds of billions annually. Ransomware payments move through regulated exchanges. Fraud proceeds enter global investment markets. Sanctioned entities reroute funds through 30 countries and private financial networks. Even when exposed, the response is often symbolic rather than structural. The system punishes individual actors, not systemic vulnerabilities. The truth is uncomfortable. Legitimate finance and the underworld are no longer separate spheres. They are interdependent. Criminal money relies on financial institutions to survive. Financial institutions rely on capital flows, regardless of origin, to maintain growth. Governments rely on the stability of those institutions to preserve economic order. This creates a cycle where everyone knows the problem exists, but no one wants to disrupt the system deeply enough to solve it. So what does this mean for the future? It means that financial crime isn't a glitch, it's a feature of a system designed for speed, scale, and profit. It means that transparency will always lag behind innovation. And it means that the line between legal and illegal wealth will remain blurred as long as complexity protects anonymity. There are three truths we need to confront. First, criminal networks don't infiltrate finance from the outside. They grow within it, using the same tools as legitimate actors. Second, enforcement failures are not just technical. They are political and economic choices. And third, as long as global finance prioritizes growth over accountability, the underworld will continue to thrive inside the system meant to exclude it. The real question isn't whether this can be stopped. The question is whether the world is willing to accept the cost of stopping it. Because true reform would mean slower capital flows, less secrecy, and fewer profits for powerful institutions. And history suggests that when faced with that choice, the system chooses convenience over integrity. If you want to understand how money, power, crime, and global finance truly interact, beyond headlines and official narratives, this is where the story begins. Subscribe to The Dark Economy and join us as we continue to uncover the hidden systems shaping the world you live in.